right, let's get officially started here. Welcome to the 10-Minute Investor. My name is Todd Schaefer. I'm the manager of research for VectorVest, and I love presenting this presentation because it's a big eye-opener for a lot of folks. So I think you're in for a treat. So the concept here is that we want to consistently outperform the market in less than 10 minutes a day. And the first thing I want to do is kind of clarify that statement. It's not that we're going to be in and out of the market in 10 minutes, right? Like we're doing some kind of day trading. This is the opposite end of the spectrum. Hence, the guy in the hammock this is a 10-minute daily routine that you can do anytime you want, right? Whether the market's open or closed, 2 in the morning, if you're a third shift worker or something, you can fit this 10-minute routine into your schedule and take control of your investing future and still maintain a lifestyle because the time commitment is kind of low. So if that sounds attractive to you, then I'm confident that if you apply some of the things you're going to learn here today, you'll actually be able to invest with confidence and outperform the market in that 10-minute a day routine. So you're in the right place, particularly if you're tired of buying stocks that seem to drop right after you buy them. And sometimes seems like the market maker is looking over your shoulder. He says, "Aha! I see your order. Now I'll sell." Right? They're just camping out waiting for your trade. Or maybe you're frustrated because you don't know when to sell. Maybe you've had some winning trades, but then they move against you and you sit there watching a winner turn into a loser simply because you didn't know when to sell. Or maybe you just don't feel that you have enough time to manage your stocks, right? This is supposed to be, some hard-won endeavor. And in the modern era, life is pretty complicated, right? Time is short. We all seem to have full schedules. So maybe you feel time crunched to be able to do this well. Or maybe you just don't have any confidence that you can actually make any money in the markets a lot because maybe of the experiences you've had in the past, right? The mistakes that you've made and some of the pain that you've suffered. You've just kind of given up on yourself. Or maybe you're just looking for a simple way to buy the right stocks at the right time. Right? So if you're any of those, then you are in the right place because today we're going to talk about a couple important topics. The first one is how to move from being inconsistent in your performance or your results to getting consistent gains or consistent performance. Right? So the things we talk about in this first section are we're going to cover the biggest mistakes that you're probably making. We're going to identify those mistakes, talk about what they look like and what not to do. So just by knowing that, that'll help you out. But then we're actually going to be proactive and I'm going to show you the 5 steps you need to take to get consistent gains. Next, we're going to move into how to pick stocks. This is where I'm going to give you a three-part stock buying checklist, the same checklist that I go through when I'm looking for stocks that I want to buy. So in this section, I'm going to show you what to look for. We're actually going to look at some examples, and then you and I are going to go into today's live market action, and we're going to use the tool that I use. We're going to look for some stocks, and my guess is that you'll probably find at least a half a dozen stocks that you'd consider buying on Monday. All right, so a very practical benefit from today's webinar. All right, and then finally, I need to put all those things that we talk about together, wrap it up into this idea of a 10-minute routine. Right? So in this part, I'm going to show you how you can put these ideas into that 10-minute a day routine, which of course, as I said, you can do it anytime during the day or night. Right? It's the same routine our clients are using. In fact, it originated with one of our clients who was just totally stressed and overwhelmed during the financial collapse. Right? So I'm guessing there are a couple people in the room who remembered that. Right? Well, he'll be our case study. He implemented the system and really turned things around in his own personal portfolio. Okay, so those are the 3 big buckets or pieces of the presentation today. But before we get started, I do want to entice you to stick around to the end because I will hand out a template that will help you take the concepts that we're covering today and plug them into your own trading system, your own trading plan. All right, so I'll hand out that PDF at the end right before we do our Q&A, which we will have at the end of the session. All right, so if I forget, remind me, but I've gotten pretty good at remembering, I think. So every group is different, So what I'd like to do is start the conversation by hearing from you. What's the hardest part about making money in the market for you personally? Is there a stumbling block that you seem to keep tripping over, or I don't know, the glass ceiling or the brick wall, right? Where is it that you find yourself continually struggling in your efforts to be profitable in your trades? Chat it into the box for me. By the way, if you want to do that, you have to go to the GoToWebinar toolbar or into your chat box on YouTube and post your questions there. All right, so Tony's first in. Selling too early, says Tony. Tim says, when to get in when I select the stock. David, it's scrolling by a little faster. I'm having trouble being consistent in my daily routine. When to sell, says Norman. John says, taking losses early. Gary says, selling. Timing, says Barbara. Barrage of tweets coming from the White House, says Billy. Well, I can't do much about that for you, right? When to sell, says David. Re-enter the position after a trailing stop, says Tony. Frank, when to sell. So you get a feel for what's coming across my screen here. Typically, the answers fall into one of three categories. I like to call them the buckets or the pillars of any trading system. When to buy, what to buy, and when to sell. Right? Those are the three major questions that we need to answer to develop a systematic approach to trading. Right? So let's take that information and move forward with it and talk about why most of us as individual investors fail, or at least struggle. We'll be more gentle, right? Nobody wants to be labeled a failure. Well, does it give you any solace to know that the average investor underperforms the market? The average professional fund manager underperforms the market, right? So here's a study done by the folks at Dalbar through the end of 2016. And you can see the orange bars are the S&P 500, the blue bars are the average stock fund investor, and yes, you can see we consistently underperform the market. Right? Well, when that happens to us, what happens? Right? Well, you start getting frustrated, right? Because obviously you're trying to outperform the market, otherwise you might just go and buy the ETF, right? So you end up cursing the market, thinking that the odds are stacked against you, right? Or something a little more nefarious. Or maybe you turn around yourself and think, well, geez, maybe it's me. Maybe I'm the problem, right? The last person to know is usually the problem, right? But what I'd like to do is before we start running down that litany of why we're failing, let's stop, take a breath, and kind of break the cycle. I'm a big believer in performance psychology, and in this case, trading psychology, right? Let's instead paint the positive picture of what it would look like if you were able to do this correctly. What would that be like? Well, first of all, you wouldn't have to stress anymore about your trades because you'd know that you have everything under control. Right? Even if trades go against you, which I promise you they still will, you'll know you have everything under control, and that leads you to be able to trade with confidence. And from a performance psychology basis, that makes all the difference. So the question then is, how can we move from being inconsistent to being consistent, develop that confidence, right, to improve our performance? All right, so the first thing I want to do is cover the mistakes that are causing you to be inconsistent. So VectorVest has been in the business of coaching and researching the stock markets for our clients for over 30 years now. And in that time frame, we've identified the four biggest mistakes we see folks making that cause them to be inconsistent. I want to make sure that I emphasize strongly enough how important it is that if you are making any of these mistakes that you have to eliminate them, because each one of them by themselves will sabotage your success, right? So you have to fix the mistakes or you will never fix your inconsistency problem. So let's move into the first mistake. The first mistake is that we see people thinking of the money first. So you may be thinking, well, of course I'm thinking about the money. That's why I'm here. I'm investing money. I got it. Let's think of this from the trading, the performance psychology perspective, right? Because really what I'm going after here is When we think of the reward first, I don't know, whatever you're investing for, a new boat or car or retirement plan, whatever it is, right? When you think about the reward, that it sets you up to make a couple catastrophic mistakes, right? So let's think instead about, I don't know, positive experiences you've had, successes you've had, either in work or maybe in sports or any endeavor that you did, that you took on, that you excelled in. Did you find your success because you thought about the rewards it would bring, or did you find success because you focused on doing the task at hand well? Right? If you're a golfer, did you practice on your swing, or did you think about your buddies buying you drinks? So the point here is on our investing, let's think about making and concentrate on making good trades first. Then the money and the rewards flow from that. Right? Because when you get that upside down, you're setting yourself up to make some other mistakes. Particularly when things start going against you, which of course they will. Right? We start making emotionally based decisions. Particularly in markets like we've been in currently, where the market's up or down with a lot of volatility, there's a lot of emotional trading going on, a lot of emotional decisions that are being made. And when you're making emotional decisions, you typically are not making good decisions. If you think about the last road rage incident you had, whether you were the instigator or the victim doesn't really matter, right? You play it back in your mind 1,000 times. Were you proud of the decisions that you made? Right? Were you proud of how you behaved? If you were the victim, were you not in your car hopefully thinking, what a nut job, I'm locking my doors, right? The point is, you're giving yourself over to your emotions. Did you make the same decisions that you would have made had you not been upset, had you stayed in your rational self? I'm going to bet $100 that no. The answer is no. Right, so let's play a little game. I call it the Have You Ever Said game. I know, creatively titled, right? So I'm going to present you 5 statements, and I'd like for you to reflect on the statements and consider whether or not you've made any of them related to a stock trade. All right, so let's start off the first one. I know it's down now, but it'll come back. Have you ever said something like that, close to that, as it relates to a stock trade? How about number 2? It's already down 20%. I might as well hold on to it now. How about number 3? I have a profit, but if I close now, it'll probably keep going up. Number 4. I know I lost more than I thought, but if I close it now, it'll probably go up tomorrow, or at the conference call, or after earnings, or whatever. Pick your poison. The last time I sold a stock, it kept going up, so I'm not selling this one yet. So those are my top 5. Have you said any of those questions? I like to call this a little personal inventory, right? So we're having fun here and it's a game. But first of all, have you said any of those statements? Have you said any of them more than once? Have you still been saying them recently? All right, well, here's the payoff. What do all of these statements have in common? Well, they're all emotionally based statements. So here's the payoff. If you're thinking any of these things before, during, or after your trade, by definition, you will not be successful because you're making emotional decisions. Right? The solution to emotional trading is to build in a system, a rules-based system, right? Which keeps this an intellectual process, not an emotional one. And you keep referring back to your system or your rules to avoid the emotional decisions. Now, let's pause here for a minute because I want you to kind of come back to your neutral place, right? I asked you to relive your last road rage experience and some of your difficult trades, right? Did you feel the memories kind of working on you? Your stomach knots up a little bit. You feel you get a little more anxious. Maybe the heart rate increases, right? Those memories are having an emotional impact on you just like they did the first time around. Right? So I want you to be aware of that. So for now, though, close your eyes, take a deep breath, whatever you need to do to get back to your emotionally happy or neutral place. Let's do that, because this is still the first mistake. Right? Now, this mistake is heavily into the performance psychology side, right? The rest of the mistakes are more mechanical. But let's move on to the second one. The second biggest mistake that we see folks make is that they buy stocks that are going down. Now, if you're like most folks, right, most of us, when we take on a new endeavor, right, when you first got into investing, the first thing you thought was, well, I don't know enough about it. So I need to go do some research to find out how to do it successfully, get some tips and pointers, right, etc. So when I first started investing back in the 70s, I didn't have the internet, so the first place I went to, I guess I had Louis Rukeyser. His show just came to my mind. But you went to the library, right? And you went and got the fattest books because those were always the best ones, right? And you started doing your research, subscribed to some financial magazines, some financial newspapers, right? The financial press. Now, of course, we get on the internet and we watch financial television, etc. But the idea is, I'm looking for some insights and some pointers, and where did I turn? I turned to the industry mouthpieces, right? The people who are writing those books, producing those shows are industry insiders. We call them the industry gurus, right? And those industry gurus are telling you to buy stocks that are going down because they're getting cheaper. You can buy more shares. And if you continue to buy more and more stock as the price falls, then you're paying a lower average cost for those shares. All of that is true. That's not the problem. Here's the problem. This is a graph of Windstream, and I really don't want you to even worry about the symbol, what the company is, or the time frame. What I want you to look at is the graph pattern, right? So this is a stock that those gurus typically would tell you is ripe for a buy. Why? Well, I'm looking at a 1-year time frame, right? Daily candlesticks here. The stock is just coming off its 52-week low, right? How much lower can it go? And now is a great time to buy it because it's on at a discount, its multiple is low, etc., 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 right? And we're just going to ride this puppy all the way back up. Well, other than the 52-week low, you probably would have gotten the same advice at each of these bounces, right? So you should have bought it here, 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 and you should buy it now. Well, obviously, this puppy didn't just go back up, this puppy just kept going down, right? This example was brought to us by one of our newer clients when he came to one of his first coaching sessions, right? And that's basically, we get together with our clients to talk about what we're about to talk about here. All right, he came to the session on this orange line. That's the date line he came, right? And he posted into the webinar, just like you're in now. He said, what do you think about Win? His name was Steve, by the way. I bought it 2 days ago. So here's the day he's asking. 2 days ago was this last green bar. I hope you can see it on the screen resolution I have here. Have you ever bought the last green bar? Well, yeah, obviously. And I'm not here to tell you you won't do it again. Right? The difference now is you're going to have a plan on what to do when it happens to you. But to stay on track here, right, we talked to him about why he bought it. Right? This is a classic example of being bought to buy stocks that are moving down. And the good thing is, after we had that discussion, he typed back into the chat box that he's selling it now. So we'll talk about the specifics of how he came to that decision. But the point that I want to get across here at this point is that when you buy stocks that are going down like this, they typically continue to drop. In our example here, the Windstream trade, after he sold it, dropped another 10% in the next 2 weeks, and a total of 62% before it started to move back up. All right, and even that bounce turned out to be a head fake because they've been delisted. I think they went bankrupt. All right, so keep this in mind. What you see in the past is most likely what's going to happen in the future. Being taught to buy stocks that look like this one sets you up to make the next mistake. You end up holding on to losers too long. You might have been in the same shoes as Steve, right? You buy the stock, right after you buy it, it starts to drop. You end up holding on to that loser because obviously the downtrend hasn't ended, but it should any minute now, right? And so you're doing the, oh, come on back. Oh, it'll come back. Or, oh, I couldn't have been wrong on this one. Or probably the worst solution would be, well, maybe I should buy more, lower my cost basis, right? One of the worst things you can do is buy a stock and not have an exit plan. It's like jumping out of a plane without a parachute, right? You're now left to the whims of the market or your emotions. So looking back at Windstream, right? A lot of investors get in on that trade and they just sit on it, hoping and praying for it to come back, and then find they're still holding it months, maybe years later, right? Now down 60%. Right? There are a couple things that are happening to you when you're in that situation, right? And most of them aren't good. So the first thing is, every time you open your portfolio, what's the first thing your eyes land on? It's that double-digit red number on that trade. And from a performance psychology basis, that is suicide, right? It's a constant reminder that you stink at this. Go get them, Tiger. Right? Second one is you're at a loss, right? And a lot of folks, we kind of massage ourselves saying, well, it's not really a loss until I actualize it because it could come back. Okay, yeah, I'm with you. Could come back. And some of them do, to be honest, right? But the point here is that the position is down 60%. That is a loss whether you've actualized it or not. If you came under financial duress and needed to liquidate the position, you would only get its price today. Nobody cares that you had good intentions, right? And the third problem with this is related to that. There's an opportunity cost. Yes, this is down 60%. But now I have to get back the 60%, so that's going to take time, before I just get back to baseline to make future gains. The other thing is I have money tied up in this position that can't be put to work in something that actually is going up. So there's an opportunity cost here as well. So how do we avoid all of that happening? Well, you don't buy stocks anymore that are going down, and when you get into a position, into a trade, you have an exit plan up front. Right, here's another example. Right, this one brought to us a woman in the same coaching, a different session, but same coaching venue. Right, she owned a stock that looked like this one. She actually had bought it near the peak on the upper left corner. It dropped right after she bought it. She didn't have an exit plan, and now she's still holding it. We had that same conversation of, well, why are you still holding it? Right, she said, well, I haven't sold it because my husband thinks it'll come back. So now, by not having an exit plan, not only is it causing a big monetary loss, it's also causing unneeded stress in her marriage. And this is to not to knock her, but if you think about your own situation, what kind of rationales have you come up with to convince yourself why you need to continue holding that position? And it's just compounding the problem. All right, let's move on to our fourth mistake, because it's probably the biggest. Right? The fourth mistake is that we ignore market direction. Okay, for years now, the gurus, maybe forever, have told us that buy and hold is the way to go, right? Because you can't time the market. So unfortunately, this sets you up for a roller coaster ride in the portfolio as the markets gyrate up and down, right? And just like the roller coaster, the ride up is really slow, and the ride down is uncomfortably fast. So I'm guessing there are people in the room, right, who remember the dot-com bubble burst back in 2000, right? Maybe certainly the housing bubble burst in 2007 and the global financial crisis that followed it, right? After the dot-com bubble burst, right, market falls down into the end of 2002, right? It's a 5-6 year climb back to the ultimate high that we reached in late 2007. Right? So it takes 6 years for us to get back to the new high, and then what? A year and a half to lose almost everything. Right? If you look just at the financial crisis, right, the market pulls back 40%, roughly. Well, the problem is that when you lose 40%, you need to gain 66% just to get back to break even. Right? For most of us who have an objective of making about 10% a year from the markets, which is close to their average over time, you just signed up for a 6.5 year recovery to get back to break even or your prior high, right? So that kind of puts the lie to this idea that, geez, if I could minimize this, anything that I could do to minimize the 40% drawdown would put me in better shape to take advantage of the ensuing recovery. And by the way, our emotional selves won't be ready to buy at the dip at the bottom, by the way. All right, so let me take a moment to introduce then Robert. He's going to be our case study for this presentation. He wrote us a letter and said he had retired in 2005, but then the financial crisis hit in 2007. He said we'd used professional advisors for direct shares and few managed funds to help build up our retirement portfolio. They all told us to ride it out. By mid-2008, our portfolio had lost 40%. Our retirement plans were in ruins, we were in total despair, and it looked like we'd have to get a job. So before we look into Rob's situation in detail, I do want to take a pause here, take a moment to do another little gut check with you. All right? Because we just went through the 4 mistakes. Thinking of the money first, buying stocks that are going down, holding on to losers too long, and ignoring the market's direction. What I'd like for you to do is pause, do a little self-reflection here, and answer it for yourself. You don't necessarily need to tell me, but you can, of course, if you want to. Which of those mistakes have you made? Which of the 4 mistakes have you made? Maybe you've made all of them. Maybe you've only made one. But catalog for yourself. Identify the mistakes that you've been making out of these 4. Now let me turn up the heat a little bit. Have you made any of those mistakes more than once? Yeah, Dan, all, Norman, all, John, all of them, yeah. Right? You're not alone, I promise you. Right? So, you've made the mistakes, you've made some of them more than once. Of those mistakes that you've made, which one cost you the most? And I don't want you to do it in terms of percentage. I want you to do it in terms of dollars. Dollars and cents. We're rounding here, right? But what I'm trying to get you to do, and this is a little bit of tough love, right, is when you start putting all of that together, you start to recognize that these mistakes cost you money. They have a real cost associated with them. And you're making them repeatedly. Ouch, right? So let's stop making the mistakes. Let's eliminate the mistakes. And of course, the way to do that is we're going to develop systems to help us avoid making the mistakes. All right, so particularly, as I say, each of these mistakes will scuttle your consistency over time. So if you want to deliver your own financial future, we need to get this under control, right? So those are the mistakes. Let's talk about how we're going to fix them, right? Well, let's start out with the problem is that the system or the model that you've been using to invest is broken, if you had one at all. Right? There's a lot of folks who just buy stocks when the economy is doing well, they hear good things about the market, and they go out and buy a couple $1,000s of, Starbucks because I like their coffee and I go there every day. Not aware whether or not Starbucks even makes a profit, right? We don't know anything really about the company other than I like them and I go there. And of course, I hold that stock until the economy turns south and there's blood in the streets and I get worried and I look at the brokerage statement and I go, oh my gosh, I can't take the pain, sell. Right? That's not a system. Right? We're looking for the opposite end of the spectrum, right? We want to install a system to help us control ourselves as much as our portfolio. All right, so to fix it, we need to install the correct system. So I'm going to share with you the system that we use with our clients. It's a system we teach and support with live coaching every week. We get together and focus on this 5-step system with our clients. In these webinars, I draw it out as a triangle. Segment that triangle into 5 parts. 5-step system, makes sense, right? So the first step in the system is we need to be able to analyze any stock that we own or are interested in owning and know whether it's over or undervalued, whether its earnings are rising or falling, and how safe it is. So take an inventory of all the stocks you own or are interested in owning and understand them from those three perspectives. Secondly, you don't want to hold on to your losers too long, so you need to make sure every stock you own has a stop loss in place to minimize your risk. In other words, you want to know your exits and you want to know your exits up front. Third, you don't want to ignore market directions, so you want a definite signal or rule in place to make sure you know when the market's rising, so you know that it's okay to be buying. Some people use moving averages on the S&P. Maybe you've heard of the Golden Cross, big institutional convention of the 50 and 200-day moving average crossovers on the S&P 500. So the same professionals who are telling you you can't time the market are timing the market. Right? And the idea here isn't that we're predicting where the market's going. We're just identifying that it's currently rising, that it's currently doing what we want it to do. Because that's a better time to be buying stocks if you're hoping for them to rise. All right, so that Golden Cross is a little slow for me, so I don't use it, but I'll tell you what I use here in just a little bit. All right, the fourth step in the system is that you don't want to buy stocks that are going down, so you want to find good quality stocks that are rising in price for your portfolio, and you want a technique that finds stocks that are likely to go up, not down. And then finally, you don't want to trade emotionally, right? So you want a written plan that you follow. It's not in your head, right? It's a written plan. You wrote it down on paper. And I like to say you wrote it with enough specificity that you could hand it off to your brother-in-law and go on vacation and he'd have no trouble running your account. Right? So by using this 5-step process, then it leads you to trade with confidence and generate consistent gains. So the first thing I want you to do is focus. Actually, let's assess first. Assess on these 5 points. Do you do them all? If you have one that you do and you do well, you're satisfied with it, you're happy with it, put a little smiley face next to it or a star. If, however, there's something in the list that you don't do or don't do well, put a frowny face next to it. Right? So if you never know your exit when you take on the trade, frowny face, my friend. Right? So, what are you doing? You're doing a personal inventory of your system, right, and identifying your weak places or your weak spots. Right? So wherever you have a frowny face, you've just identified an area that you need to work on. Right? And just start at the first frowny face at the top of the list and work your way down because one builds into the next. So what did we just do? We just identified the holes in your trading system. Right? Now, we're not going to be able to fix those problems, right? But awareness is the first step on the road to recovery here, right? So we've identified the holes in your trading plan. What you need to do is get them all to be smiley faces to find that consistent performance, right? To take this systematic approach. All right, so let's dig deeper now and talk about the second big chunk of conversation we wanted to have, and that was talking about how to find stocks to buy. All right, so let's set up the problem like we did in the first go around here. What's holding everybody back from finding good stocks? Right? Well, it might not surprise you after the conversation we've had so far is that the problem's not necessarily your fault. Right? As Mr. Miyagi said, there are no bad students, just bad teachers, and the industry is not a very good teacher. Right? So when you try to take this on yourself, the first thing that you're hit with is data. Oh my gosh, we generate data in this industry. Lots and lots of data. You know, I still remember every time I do this presentation, I think of the first time I tried to buy a stock back in the 70s, and I opened the newspaper, right, the one that put black ink on your hands. Right, you go to the financial section of the newspaper, you go to the stock pages, and there's 3,000 stocks listed in a number 4 font in alphabetical order. And you're trying to figure out which one's the one I want. Right? Well, that lasted about 5 minutes before you said, well, that's obviously stupid. I don't have the information I need here. Right? So that data, oh, it's great to have data. In fact, there are services that tout how much data they can provide you. And so for a small monthly fee, here's an example of the report we'll generate for you, and look at all the data we provide. And I look at it and go, well, yeah, okay, I agree. You sold me. There is a lot of data, but I'm still left with the same problem that I had with the newspaper page. Which is important, right? And how do I compare this stock with any other stock? Well, you've given me these bubbles, these 12 bullet points on the page, so I'm presuming those are the most important things to look for. But still, how do I compare these 12 data points to the 12 data points of another comparative stock? How do I make an intelligent decision? You haven't solved my problem. My problem is not that I don't have enough data. My problem is that I don't have enough information, right? You're not giving me the right tools to make a decision. It's like giving the wrong wrench to a mechanic. You can't turn the nut or the bolt if you've got the wrong size wrench, right? So you got to have, I need the right tools, right? Otherwise, you're left to struggle to figure out what the most data points are on your own, right? To add to the injury here, I'm going to call it the insult. I'm going to use Mr. Kramer as my example. It's not to disparage Jim Kramer. Brilliant guy. He's made a lot of people a lot of money, very successful in the markets. I'm not detracting from his accomplishments at all. But he says in his own book, Mad Money, that if you want to try to take on investing for yourself, you need to commit to doing homework on the stocks that you're considering investing. And homework means 1 hour per week per stock. And of course, go to the conference calls, et cetera, et cetera, et cetera, right? Much less than that, and you might as well be gambling. So, what's the message here, right? If you do the math, you say, well, okay, I have a 10, 20 stock portfolio. I just signed up for another job, right? Well, the subtext of the message is, well, that's correct. Well stated, sir. Right? And by the way, I'm a professional. I've been doing this for 40 years. Just send me your money because this is what I do all day, every day. Right? In other words, a little pat on the head. It's too hard for you. I'm a professional. You know, you'd be crazy to try to take this on for yourself. Right? Well, we already know how well the professionals are doing from the Dalbar study. Right? So that's not a solution for us, right? It doesn't give us control. So the problem is when we try to take control and we're faced with all those data points, right? We end up staring into the snow. Have you ever driven in like a blizzard at night and the headlights are just showing you falling snow? And all of a sudden you start losing perception of depth, right? You can't focus anything but on the snow that's like 3 feet in front of your headlights, right? When you do this wrong, you end up suffering analysis paralysis, right? You're spending hours upon hours poring over all those data points or looking at 200 charts a night, right? If you've ever done that, and believe me, I have, you end up convincing yourself that you're seeing something, whether or not it's there, right? What do we want? Well, what we'd really like to have is a solution that gets us to the answers quickly, right? To know whether or not you should be buying the stock. And it is possible, and I'm going to show you, prove it to you here in just a couple minutes. Right? So get your pen ready, because as I said, we're going to go into live market and look at some stocks, and I think you're going to like at least half a dozen of them. All right, so let me show you how to do it, but let me set you up for success. So our founder, Dr. Bartolito, teaches us that good portfolio management starts with buying the right stocks. And just like with a sports team, if you load up the team with great players, just having the great players will help the team do well, even if you're a lousy coach. So by filling your portfolio with really good stocks, just the good stocks alone will help the portfolio do well, even if you're a lousy portfolio manager. Right? So let me share with you the checklist that we teach our clients to use when looking for stocks to buy. And it's surprisingly simple, right? We just want to favor stocks whose price is steadily rising with low volatility, favor companies that are making money and growing their earnings, and we're going to favor companies that are undervalued. All right, so let me give you a little quiz. Here are 3 price charts. We're looking at 1-year time frames, daily candlesticks for you technicians out there. Of those three price patterns, which one would you say is steadily rising with low volatility? Go ahead and put it in the chat box. It's not really a trick question. All right, so yeah, I'm getting a lot of threes pouring in, right? So it's easy to recognize the rising price action, not a bunch of wiggle in the line, right? So here's a little bonus question, another little gut check question for you. Of those three price patterns prior to our session today, which one would you be most likely to try to trade or invest in? Yeah, there, I thought so. So now I'm getting more twos and a couple ones, but particularly, like I use the word trade, right? So in shorter time frames, yeah, I can kind of anticipate that. But let's talk about it here for a minute. And let's start off with number three because that was the winner. Why do we favor this? Well, this stock over the past year now has been rising steadily, right? I like to say bottom left, upper right, smoother the better. It's already doing what I want it to do. And it's not that it hasn't had adverse moves, pullbacks, or consolidations, right? It consolidated here. It's had several pullbacks. But when it pulls back, the pullbacks aren't outrageous, right? They're not death defying, right? They don't scare you. The general nature of the price action continues. The price pulls back, and buyers move in, and we move on to the next higher high. Give me a portfolio full of these things. Give me 10 of them. Right? I would sleep like a baby. Why? Because I can see that historically, this thing doesn't make big scare me out of my pants moves. Not to mention, the other side of it is when they finally do break down, assuming it does, it's going to be very easy for me to recognize that the pattern has been broken. So, if you had an objection to number three, and I'm guessing there are some of you out there that do, you're saying, well, Todd, it's at a 52-week high. It's already made its move. Would you please show me how to buy it back down here? Okay, got it. Let's talk about it, but first I want to table the question because I want to talk about numbers 1 and 2 here first. Let me activate my little pen. Right. So number 1 obviously is not rising in price, right? And we've talked about how this stock now at a 52-week low, it's been trending lower for a year. How much lower can it go? Well, I don't know. Where's zero? I don't see zero on the chart. Right? So I don't want number 1 for all the things we've already talked about. That's pretty easy. Number 2 is a little bit more nuanced in terms of talking points. So starting off, first of all, it is on this year-over-year basis slightly higher. And it is hitting higher highs and higher lows. So it is uptrending. The problem, if you will, is that it makes these big price swings, right? 20, 30% swings. Now, if you're a trader, which is why I was giving that caveat earlier that traders might like this, because traders try to jump in here and jump out here, right? They're just trying to play the swings. So they love it. So in this 1 year time frame, they may have traded this, 5-6 times. But if you're trying to hold it for the duration, these price swings are Maalox moments. Right? Because what happens? For me to recognize that this uptrend has ended, I'm looking for that pattern to break down and for the stock price, for instance, to hit the lower low. So instead of bouncing here and going to the next higher high, let's pretend it just keeps falling and falling and falling. And I finally take out my prior low over here. What just happened? By the time I recognize the breakdown of the pattern, I'm 20, 30% off of the high. I just watched my winner turn into a loser after all this time, right? Not to mention, even if it does bounce, you're just sweating it out, going, oh man, it's down 25%. Oh, if it goes down to 30, I'm closing it for sure. And it gets to 30, you think, well, maybe just 31 or 32. So, obviously, that's a problem for us, right? Much easier to manage number 3. So let's talk about number 3 now from that longer term perspective. I've expanded the time frame now to 3 years. Still daily candlesticks. I've added some things to the graph. This green line is the value line. In VectorVest, we calculate the valuation for every stock every day. So this is our calculated value for this stock. On the bottom graph is our earnings per share data as taken from VectorVest. Now this is a little bit different. You might notice, right, that this doesn't stair step on a quarterly basis like you might expect on a historical earnings graph. We include in our algorithm earnings forecasts as provided by the market analysts. Because investing is a forward-looking endeavor, I need to look into the future. What are the future prospects for profitability from this company? Because it's that profitability, those earnings, that are going to drive the future valuation. Right? So we include that in our line. And so what I'm looking for on any price graph, any stock graph, is price actions going bottom left to upper right, smoother the better, driven by earnings performance that's doing the same thing. So let's talk about this idea that, well, it's at a 52-week high, it's already made its move. All right, well, on the hard right edge here, we're starting in October. We come to the next October, and the stock has moved from $30 now up to, well, let's call it 50. Right? So you find the stock, you go, well, gee whiz. Right? Even after pulling back here, it's just off its 52-week high. Yeah, I like the earnings pattern, but I can't buy it now. It's already made its move. So you ignore it and you go buy stocks that look like number one, I guess. I don't know. But fate would have it that you come back across the stock again on the next October. We've now moved from that $50 range up to about 65, 60, 65, even after a period of consolidation. And you're saying, well, again, just off its 52-week high, I can't buy it now. It already made its move. I missed it again. I'm 0 for 2. So you go buy stock number one. And of course, then you come to the hard right edge. Now the stock has moved from that $65 range up to 90. It's at another 52-week high. And now you've missed it for the third time. 3 strikes, you're out, right? You can't buy it now because you already missed the move. When you really missed the move that went from 50 to 90. Right? So, 2 things. Just because you're at a 52-week high, the 52-week high today can be the low on the 1-year chart next year. Right? What's the difference between this and some kind of speculative play? Earnings. Right? The thing that's driving this valuation higher is the financial performance of the company. The financial performance increases the value of the company and therefore commands a higher stock price. All things being equal, yeah, I recognize that, there are market cycles, things fall in and out of favor, you get a bad head. I got all that. Understand it, right? But on the theoretical basis, at least, that's what's driving the price higher. And stocks that have solid fundamentals tend to trend for extended periods of time. All right, so let's use that information then and favor companies that are exhibiting these kinds of performance. Right, so here's our checklist again. We're going to look for stocks with steadily rising price, with low volatility, companies that are making more and more money, and we're going to favor companies that are undervalued. So, remember when we talked about Steve earlier in that Windstream example? Right, we told him that, or after we talked to him about it, he said he was selling it now. What do you think we talked about? Well, we put up Windstream on that same chart layout, and we said, well, geez, Steve, it's horribly overvalued. Price is trending lower and earnings are falling. Which part of the checklist did that match? Now for Steve, that was an aha moment of, oh, wow, yeah, okay, you're right. I fell back into my buy the dip mode. Totally botched it. Mulligan, I'm selling the stock now. Let me try it again. Which obviously was, in hindsight, a great thing, right? Let's get used to seeing or looking at graphs to see what the correct pattern looks like, because all stocks don't have the same pattern, right? They don't work in lockstep. Some have more volatilities than others. Some have flat act, etc. Right. So here's what we're looking for. Here's an example: Covenant Transport. Right. Bottom left, upper right, smoother the better, driven by that earnings pattern. And don't even worry about the performance. What I want you to do is get used to looking at the graphs. Here's one from Skyworks: bottom left, upper right, smoother the better. Now see this pullback. Right, got a pullback in the stock action here, more significant than the others, right? So again, that was really easy to see. Usually this kind of a correction in the stock will correlate with a correction in the market. So it doesn't surprise me that a stock would pull back when the market pulls back. Right? Just think of this last correction we had back in that led into the Christmas lows from last year. Right? The majority of stocks pulled back, so it doesn't surprise me that we'd see that pullback. But when the market rights itself, it resumes trend, and that's what we're looking for. Right? So I'm looking for that consistency of performance. Southwest Airline, bottom left, upper right, smoother better, driven by earnings. Advanced Energy, wow. Right, weathered the storm, nice. A Renoir. Nvidia had a consolidation here, but bottom left, upper right, resumed its uptrend, driven by rising earnings. Ultra Clean Holdings, you get the idea. All right, so with those pictures in mind, let's do it together and test our skills. All right, so we're going to play another little game. I've gone into the VectorVest program now, and here's the thing we call the stock viewer. And in the VectorVest system, we have a system of stock analysis that looks at stocks for their valuation, their upside potential, their safety, and their current price trend. We combine those three indicators into a balanced indicator called VST, which shows us the combination of those three factors, and we sort the list by VST. So I'm bringing to the top of the list the stocks that have the strongest combination currently of value, safety, and timing. Right? It's not an alphabetical list. It's not sorted by market cap. It's not sorted by the biggest price movers today. Right? So a lot of sorting functionality here, but really what I just want to do today is let's start with this top VST list. And what I'm going to do is graph. I've got 20 on the list here. We're going to graph those 20 stocks. And what I want you to do is look at that stock graph and decide whether or not you like the price and earnings patterns. That's all I want you to do. If you like it, write down the symbol. Here's where it gets interesting. I always like to make it interesting. I'm going to give you 3 seconds to make up your mind. So what? Yeah. So we have a saying around here. If you're looking at a graph for more than 5 seconds, you're trying to convince yourself of something. Right? So I'm going to force you to rely on your gut instinct. We're visual beings. We're very good at recognizing patterns, smoothing lines, etc. Right? So I'm going to force you into that mode. If you like the broader pattern, write it down. You can come back later and do all that secondary stuff. Right? But I just want you to first react and trust your gut on the price chart. So what I'm going to do is I'm going to graph them, and I'm going to give you 3 seconds to look at the price chart and decide whether or not you like it. All right, so it'll be something like this. I'll call out the symbol XPEL, 2, 3, and go to the next one. INS, 2, 3. CPRX, 2, 3. KL, 2, 3. SAIA, 2, 3. AXU, 2, 3. APPS, 2, 3. AU, 2, 3. EGO, 2, 3. PERI, 2, 3. GHDX, 2, 3. HMY, 2, 3. LSCC, 2, 3. CAGDF, 2, 3. KLAC, 2, 3. NOC, 2, 3. USLV, 2, 3. It's an ETF, that's why there's no earnings. ACGL, 2, 3. HALL, 2, 3. Actually, I cheated you on that one. And finally, LUNA, 2, 3. Pencils down. Now, the one thing I did notice is still pretty good representation of gold stocks in there, so you might want to diversify, not taking a bunch of gold stocks. But what did you think? right? How's that different from how you have been picking stocks? Right? Give me a little feedback. Hopefully, it's certainly faster, easier, more intuitive. Quick, says Tim. Yep, absolutely. And Barbara, one, two, I'm missing your commas, but I'm guessing that there's at least a 5 or 6 stocks in there that you liked, right? So having that checklist and having the tool makes you, by itself, will make you a better investor over time, right? So I don't know where you go to get your stock picks currently. Maybe you talk to the or listen to the screaming heads on TV. Maybe you're going to talk to your friends in the locker room at the golf club or something. I don't know, right? But hopefully, you can see that when you have the right tools and you have a checklist, it is possible to get your answers quickly, right? And certainly, I would expect that you want to choose that relative to being overwhelmed by the data and looking at the snowstorm in your headlights, right? So, let's talk about then the final piece of this and talk about how we can put some of these ideas together into this 10-minute plan. All right, so we're going to turn back to Rob, our case study. You remember him, right? Remember, he was down 40% at the financial collapse. He was afraid he'd have to go back and get a job again. He said, before taking that drastic step, I started doing my own research to try to recoup my losses, spending hours each day in front of the computer, reading articles, listening to the so-called experts. Subconsciously, I was only hearing what I wanted to hear. I was now beyond despair, and it looked too hard to get back and looking it looked too hard, and getting back onto the treadmill seemed inevitable. So let me show you how he saved his retirement. Right? He followed a simple plan. Again, I'm going to draw it out for you this time. We need a table 3x3. Right? So this is how he structured the plan. First of all, there's 3 main sections, and this might sound familiar. Remember the 3 pillars of any trading plan: when to buy, what to buy, when to sell. So we're going to answer those questions with the criteria in the 3 boxes. Right? So for Rob then, the first thing he wanted to do in terms of identifying when he should be buying stocks is he wanted a market entry signal. Right? He needed something to tell him that the market was rising. Right? So we talked about the golden cross, the moving averages on the S&P. Right? We have a thing in our system called a green light, which is what he tells or uses to tell him that the market's rising and it's okay to be buying stocks. He also made sure that the market was continuing to follow through, to continuing to rise right up to the point that he executed the trade, and that the stock was also rising right up to that point. For the what to buy, well, that's easy. Just use that 3-part checklist that we just went through: rising price, rising earnings, undervalued. For when to sell, this is kind of interesting, at least in my mind. He adopted a market exit signal based on market movement. Right? Again, some people use moving averages on the S&P. Rob used a thing in our system called a confirmed call. But the idea was this: he had just come out of the financial collapse, right? 40% on the portfolio. He looked at our signal and went, wow, had I followed that signal, I would have avoided that whole mess. So he adopted a rule that said when he gets his down signal, he moves his portfolio back into cash, because there's no safer place to be. Right? Now, we're not advocating that you have to move your portfolio into cash, but you certainly should stop buying, and you probably would want to start hedging your portfolios if you're going to leave the positions open. You don't want to just sit there and take the capital hit. Right? We want to stop the rain from hitting us on the head. He also made sure that he had a stop loss on each and every one of the stock positions that he was holding. Right? And he also uses a profit target on each stock. This helps him eliminate greed. Right? So let's do a little gut check here again. Right? Take your pen, smiley faces on things that you do and do well, frowny faces on those that you don't do or don't do well. What are you doing? You're taking an inventory again here, another personal gut check on holes in your system, holes in your approach. So, how does this work? Well, once you have all 9 squares on smiley faces, right? Then all you need to do is monitor the portfolio. When stocks stop out or you've had to go back to cash, the next question that you're going to ask is, well, should I buy it? What should I replace it with, right? Well, okay, I've decided it's time to sell, but the first question I really want to ask is, should I even be buying? Well, that's a terrible arrowhead. Right? When's the last time you heard the folks on CNBC say, you know what, market's really stinky right now, don't buy anything. Just sit on your hands, sit on cash. Right? Well, we say cash is a position. So the first question is, should I even be buying? Is the market rising? If it is, okay, fine. Now I'll talk about what to buy. I cannot do an arrowhead to save me today. All right, so once I've bought the replacement position, rinse and repeat. That's the process that takes 10 minutes a night. You come in from the golf course or work or whatever you're doing, right? You fire up the computer, you check on your current open positions. If any of them have hit their stop prices, you close them out. And then you come back to the system and say, okay, should I even be buying? If not, log off. Go for a walk. Spend time with your significant other, your family, your dog, right? If you need to buy something, you now have a system that says, okay, well, I can go out and find candidates here in this 10-minute a night process. Place your orders, done. Log off. If you want to play around, fine, but now that's your choice. Now you're in control. You can be effective in as little as 10 minutes a night. All right, so let's close out our story with Rob, who said, in March of 2009, using the VectorVest unique market timing system together with its analysis tools, I went into the market and by the end of the year had closed by recouping all of my global financial crisis losses. I want to pause there because that's very close to a performance claim, and that's not what we're trying to do. What I want to impress you with here is that Rob would tell you, he's a very down-to-earth guy. He would tell you that there's nothing special about him, right? If he can do it, you can do it, right? It's all about having the right tools and having the right plan, right? Nowadays, he gets to spend minutes a day managing the portfolio, giving him the time and money to do the things that are actually important to him, right? And maybe you have a couple of those things too. So what I want you to do is pause for a moment here. Make sure that you kind of document where you need to work, right? And again, we're not going to be able to fix everything here right now, but you are starting to put together kind of a battle plan, aren't you? Right? Once we get to the point where you have all smiley faces on that matrix, you'll be able to manage your portfolio in this 10-minute a day routine. Right? So far in your investing life, maybe you haven't been satisfied with the results you're getting so far. Maybe you haven't known where to go to get your stock ideas, right? You get buried by all the data and the news and the noise. And I mean, do you get the same 40 emails a night that I get promising me 400% returns on penny stocks in 2 weeks? Right? Maybe your results have been a little inconsistent, right? And you're tired of the up and down gyrations of the market, right? And getting hammered in some of these sideways moves. Maybe it's a combination of everything. You just don't have any confidence in yourself that you can actually do this and do it well. Or maybe you're doing fine, but you'd like to get a little better. Who doesn't want to get a little bit better? Right? So hopefully I've shown you today, demonstrated for you that it is possible to get your answers quickly when you have the right tools and a checklist. Right? And by doing that, you can invest confidently and not have to rely on the quote-unquote gurus telling you how to buy stocks that are going down. And you can get consistent gains in this 10-minute a day window when you have the right plan. And that was my promise right from the start, right? Was to give you the pieces that you need to put together to make this 10-minute system work for you, right? Of course, sometimes the devil's in the details, right? It brings you to the obvious question, at least obvious to me. Well, how do I incorporate some of the stuff that I just learned into my own system, my own portfolio? Well, you have a choice, right? You can do it on your own. Log off from me here and maybe, through trial and error, try to plug in some of these things into your system. But of course, the trial and error has two costs. One is time, and of course, the other is the tuition of making some mistakes. So you can try to do that, or you can choose to do what I did, what Rob did, and that's use a system that gets you to the solution right away. Why do all the work on your own on the system, particularly when there's one already in place that's done most of the work for you? A system used by tens of thousands of people across the globe to help them make money in the markets, right? If I was going to teach you how to do this and do it well, like literally you and me together in a room, we built this course to do what I would teach you individually, right? We call the course Successful Investing Quick Start Course. It's a quick start course, not a heavy investment of time here, all right? It's designed so you can consistently outperform the market in this 10-minute a day routine, all right? So before I give you the details of that, let me, I was going to say clear the decks, but let me point out here something. This course that we support with coaching, etc., what I'm offering you here is an actual solution, right? But that means that it's not some get rich quick scheme that you're going to, it's going to take no effort on your part. Just flip this one little magic switch and all of a sudden everything will be rosy. What I'm offering you is to actually teach you how to do this, right? So that you can be successful in this 10-minute a day routine, but that's a long way of saying it's going to take some effort on your part, right? So if you're not interested in putting in any effort, then you're probably not going to be really interested in what I'm talking about here, right? Just log off, go open up that email that I was talking about that has penny stocks for 400% returns, right? So obviously the benefits of learning how to do this for yourself pay off over your lifespan, right? More money, more financial security, more freedom to do the stuff you want to do and secure your retirement, because we need to continue to generate income. We can't rely on the government. Heck, it's getting hard to even rely on your pension plans, right? So let me take you by the hand. Let me teach you how to invest for yourself, right? Let me tell you a little bit about the course. The easiest way is to just map it out. It's taught in modules, right? So the first module, we give you a stock analysis system so that you can become an expert in analyzing any stock that you come across. You'll be able to quickly determine if it's a good or bad investment, right? You get rid of all that information noise. We'll teach you exactly what to look for, and you'll get your information quickly. The second module in the course is we need to teach you when to sell, right? Because you have to control your losses, otherwise you'll blow up the account. So we'll show you the exact steps you need to take right now. Get rid of stocks that are hurting the portfolio. I like to call them the dead wood, right? And we'll also make sure that you're only risking 1% of your portfolio value on your trades. So you're going to learn how to use stop prices, right? Now you get peace of mind because you know going into any trade, including the trade you're already in, exactly when you will get out if they move against you, right? So we'll become an expert at both stock analysis and get those weeds out of your garden. Session number 3, we're going to teach you how to look for rising markets, right? It's important that you know that the market broadly is rising, right? Because even if you buy good stocks at the wrong time, right, in a downtrending market, even good stocks drop when the market drops. So you've got to know when it's okay to buy and when you should not be buying, right? So the outcome from doing this is that you put the probability of success in your favor. All right, lesson 4 is all about teaching you which stocks to buy. Right? Without this, you're relying on gurus or whatever it is you've been doing, right? Or wasting a lot of time sifting through the blizzard of data. We give you 2 cherry picking techniques to pick the best stocks for your portfolio, so you're not left guessing as to whether or not the stock is good or not, and you never have to put your trust in somebody else. We'll show you exactly what to look for. All right, and then finally, our 5th session, we put it all together into a 10-minute management plan, so you don't have to spend hours managing your own portfolio, right? We'll show you how to simplify your day, have the plan, and by the end, you'll find that you can consistently turn out profits over time, right? So at the end of this whole thing, you'll have a simple step-by-step system to buy and sell stocks. You'll be doing it in 10 minutes a day, and you'll find consistent performance, right? So here's the thing, right? If I was to teach you that one-on-one, right, through VectorVest as an individual, we would charge you $475 to do that. Well, I recognize that's a little cost prohibitive for most folks, particularly if you're not familiar with me or with VectorVest, right? You don't know me from a pig in a poke. So here's what we like to do. I'll still roll up my sleeves. I'll still do this coaching with you every week. I'll tell you more about that. But we'll get together for the next 30 days, and we're going to use VectorVest to turn your portfolio around. All right. So even if you've had no success in the market or very little experience, we're going to do this together. So we built the 5 lessons as recorded classes, which means that you can access them anytime, even if you have some funky schedule. And probably just as importantly, you can look at them repeatedly because we usually don't get it all in the first pass. Right? Now, we don't just leave you hanging with some videos and dust our hands, right? We're there for you every week, giving you this coaching support. All right? So, I'll tell you more about the coaching here in a minute, but what we like to do to entice you to take advantage of our system, right? We'll take the first step. So we don't charge you $475, we charge you $9.95. Right? I want to make sure to help you fix your portfolio, turn it around at little or no cost to you, prove to you that the system works, right? You can't even buy lunch for that amount of money anymore. Right? So we built this course directly into VectorVest. So of course, to be able to take the course, you're going to have access to VectorVest. So we'll give you 30 days access to VectorVest as well. Again, this gives you time to go through the course, but also implement the things you're learning and see the results for yourself. Right? It's the tool that helps us dramatically reduce the amount of time and effort we spend in our 10-minute day routine. You can get proxies for it, right? We're going to teach you how to trade. So even if you don't stick with VectorVest, you're going to learn things you can use forever. Right? But I think you'll see also the value of the service. All right? After the 30 days, if you want to stay with us, then subscriptions start at $69 a month, go up to $129 a month, depending on your data feed rate. But if you don't want it, just send us an email and cancel before the end of the 30 days. No harm, no foul. All right? The second bonus, and I've mentioned this a couple times now, is that we support the course with live coaching. We don't want to just throw you this content out there because remember we talked about Steve before? He made a big mistake, and without the live coaching, he may not have realized it, at least not realized it for a while. Right? So we want to help you apply the content. So I'm going to be there with you every week making sure that you're okay. Every week you're invited to a live webinar where we give you tips and techniques on how to use VectorVest. We discuss what's going on in the market and what the market timing indicators are advising, and I'll spend time helping you apply the things you're learning in the Quick Start course. We'll discuss your successes, what you're working on right now, and exactly where you need help. Right? If you need help with any part of the system, I'll help you. Right? We leave no man behind, the generic man, right? Man or woman. All right. So Tom went through our course and wrote us a nice little testimonial. The key for me here is the real turnaround was he got to this idea of the written plan, a systematic approach, and it really straightened him out and got him to get some consistent performance. Right? Now, as I said, we've been in business for 30 years, so we have a long track record and a lot of testimonials. We have popular or social media sites as well, so I'll dispense with that. You can read those on the playback if you like. Right? But the point here is we talked earlier about the mistakes that you may have been making, and a lot of you said that you had been making them and making maybe more of them. Right? And I asked you how much it cost. Your worst one, was it more than $10? Right? How much is it costing you to continue to make those mistakes? Take a chance on me, folks. It's $10. I feel pretty confident that I can fix your system. All right. So let's make. Actually, we just passed this half of the year. Right? Maybe the balance of this year into 2021 or 2020. Let's turn this thing around. Right. So. That's the program. If you'd like to take the course with me and go to the coaching, go to www.vectorvest.com/SIQSC to sign up. We'll get all your contact information and everything, right? So that's my plan, the 5-step program. Again, it's a quick start course. It's not a heavy lift in total All 5 sessions probably about an hour and a half, something like that. So you can go at your own pace. And as I said, watch them as many times as you need to. And again, we're there to support you with coaching every week. So for some folks, and again, VectorVest.com, SIQSC, for some folks, it's helpful to know that there is a money back guarantee. I'll even refund the $10 for you if it'll put you at ease. Right? I've never had anybody take me up on it, but the idea here is if you take the course, and please, I'm not interested in tire kickers, right? You do nothing but distract me from the people that actually want to be helped. If you take the course and you actually do the work, I can see if you logged in or not, right? If you do the work and it's not for you, I'll gladly give you back the $10. I know the education in and of itself is worth 1,000 times that, right? But if you're not satisfied for whatever reason, I'll give you back the $10. Hopefully that gives you a little bit more peace of mind, again, if you're not familiar with us. All right? By the way, if you stay with us, we'll convert from this coursework. We would start a monthly trial or a monthly subscription for you. You can cancel that at any time. You're not signed up like the sports club where you locked in on a 1-year contract or something. We go month to month. It's not a problem. All right? We fundamentally understand that we need to provide a service to our customers, our clients, our subscribers, if you're going to remain that way, right? And we don't have a problem with that. So you're not locked into anything with VectorVest. And in fact, if you start off with a real-time data feed and decide you don't really need real-time and you want to change to interest, we don't charge you extra for doing all that. You can change the tool to fit whatever you need. All right, so that's my offer, vectorvest.com/SIQSC. Give me a little chat in the box if you're going to join us, and then I'll look for you on our Thursday session. Type I'm in into the chat box there. I will take your questions. I do owe you that training plan PDF, so let me do that first. See, I'm getting good. I actually remembered it this time. There you go. That's coming across. It is a PDF, so you have to have PDF Viewer. All right, so you may need to download that. Let me answer some of your questions. And let me start off with those of you who are in. When you sign up, you put in your information, of course, and you'll get an email receipt. You'll also get a username and a password. When you first log in, you're going to come into this welcome page. All right, and the first thing I'd suggest you do is actually go through this little tutorial that helps you build a watch list. Right, so stocks that you've traded in the past, you're kind of familiar with them. It helps you get used to the VectorVest system of analysis. But the course is on this training tab. So here's the Successful Investing Quick Start course. Here are all the videos. Right, we've got some navigational aids here as well. But this is the course. So if there's anybody in the room who's actually paying, I don't want to talk to you right now. If you're currently a subscriber, then you already have access to the course. Just go to the training tab, watch the videos, come join us in the next coaching session. The coaching sessions, by the way, you can click it. You can click the link to get to them right from this training tab. We also, on the home page, if I scroll down, Successful Investing Coaching link is right there. We'll also send you an email link, so it should be easy to find us. If not, give us a call. Our product support is free, 800 number. We'll help you out. All right, so while I'm here, notice that there are a lot of tabs in VectorVest. As I said, we've been around for 30 years now. But the tool is used by our subscriber base that ranges from intraday traders to buy and hold investors and option traders. Right? So it's a very powerful tool helping a wide range of folks. I want you to feel confident and secure that there's no upsell going on here, right? We're going to take the course together. Everything you need to be successful in the course is available in the base subscription. There are no ups, there are no extras. Yes, there are other things here that we're not going to touch, but that's okay. We don't need to touch them. Right? Let's do this kind of organically. If you later on decide you want to kind of ramp it up, whatever, okay, fine. But everything you need to be successful is right here. All right, so no worries about that. So, uh, if we have some people in the room who are from outside the U.S., in particular Canada, in our time zone here, but even if you're over in the UK or Europe or Australia, we do have databases for those other markets as well. If you're in Canada, for instance, you get your home market as well as the US, so you get both for the same $10 price. We teach predominantly in the US and Canada, but the systems apply to all of the different markets. The tool's the same. Right? So the Thursday sessions, or the coaching sessions, are on Thursdays. I should say it that way. And we're at noon Eastern time. So we do record those sessions. So if you can't attend, if you register for it, we'll send you the replay link so you can watch the session. You can, of course, email us and we'll answer your question during the session. But you can also call our product support team. Right? It's free and they're there and they know the system too. So you don't have to wait for Thursday. You can get your answer like now. Right? So we want to support you. We want to help you be successful, and we do as much as we can to do that. Other than me coming to your living room and trading for you, but probably not going to happen. All right. So you got the recordings. If you miss the sessions, right, at the end of the course, then we just transition into a monthly subscription unless you cancel. All right. Now, VectorVest is not a brokerage, but we do have some partner brokers. So if you're looking at the stock viewer and you want to trade a stock, probably, I don't know a percentage, right? But you can just take that stock symbol and go to your brokerage account and enter the trade. We do have partnership agreements with Ally Interactive and TradeStation brokerages, where you can actually generate an order ticket in the VectorVest tool and transmit it to your brokerage. So you can basically do everything just from the VectorVest platform. So a lot of folks like to take advantage of that, but we are not a brokerage. We don't execute trades, right? We're simply an advisory service. All right, and those live sessions, the coaching sessions, were on Thursdays at noon. All right, so I got to the bottom of the list, I think. So if you have a question still that I haven't answered yet, if you would, please cut and paste and repost your question, and I'll make sure that I get them answered for you. And I do appreciate your patience. I'm a little one-man band here, right? All right. Let's see. If we get extended down market, how would the program work? And I don't have a name. All I have is an email address, so it's a little hard. VTI, but this program, the program supports playing bear markets, either shorting or buying contra ETFs, or buying bearish options, right? We support that. In this course, we focus on bull markets because bear markets as a subset, right, are typically shorter lived and have more volatility. So we want to walk before we run. The course really focuses on bull markets, right? So at first I would say, you know what? Let's just play the bull runs, sit on our hands in the bear runs, and you can still outperform the market just by taking advantage of those bull runs. All right. Wendy, will we be offering this again? Well, we have been. So I make no promises to the future. I'm not sure what that holds, but yeah, just stand by and look for another email if you have a conflict. It means you can't do it now. All right. Each module, Barbara, is about 15-20 minutes, up to a half hour maybe. All right. Richard, I can't charge your American Express card here. You'd have to go into vectorvest.com/SIQSC, but I'm going to take that as an I'm in. Awesome. And we will see you then on Thursday. All right. And by the way, when you come to that first session, we always start off the session by asking for who's new in the group. Please be bold and just chime in and say, hey, I'm here. We don't beat you up. There is no hazing. Nobody's swallowing goldfish. Right? You're anonymous. We can't see you, so it'll be okay. But we're building a community. And so through doing that, then we all get more familiar with each other. And particularly if you participate beyond saying hello, then we all get to know each other better. Yeah, it's Tony. So, how do I broach this? The Quick Start course is the abbreviated course, right? We also have an expanded course, which takes each of those 5 videos that are 15 to 30 minutes long and expands them, goes in kind of into the weeds, if you will. If you're really looking for the granular detail, then that's the full course. It has a higher rate charge to it, but that gets you into the minutia, if you will, if you want to go that deep. Certainly not required. Barbara will be there. Awesome, Barbara. We will see you in as Norman too. Awesome. Tuan says, can I join later? Well, yeah, of course. We've been in business for 30 years, so I'm counting on 31. Right? What time is the coaching on Thursdays? At noon Eastern, Carl. And Robert says he's in as well. So this is Robert Z. So awesome, Robert. Give us a shout when you get to the coaching session. And I have... Yeah, so Dennis, if you're already on a subscription to VectorVest, you don't need to sign up for the course at all. Just go to that training tab, watch the videos, and then sign up for the Thursday coaching. All right, so you're already in, my friend. No ups, no extras. All right, what time is the module, Barbara? Noon Eastern. All right, Wynn says, do you encourage investors to only have a maximum number of stocks to keep management time down? Yeah, so we do rules of thumb, Win, which basically means a range, because the number of stocks that you are trading is related to your approach, right? How aggressive or conservative are you being, size, position sizing, etc. So yes, we do advocate that you have a portfolio, a limited number of stocks, because I run into a lot of folks who have their own little mini mutual funds, trading 100, 200 shares in a larger portfolio, and that's just too many stocks. You can't effectively manage them well at all. I don't like looking through 200 charts to find a candidate stock. I certainly don't want to look through 200 charts every day to manage my portfolio. Right? So, yeah, we want to simplify. Right? Larger positions. That may mean that we're in larger cap stocks that move a little slower. Right? And there are other options, other choices you can make, like dividing the portfolio by objective into different size tranches, that kind of thing. All right, if on the mobile VectorVest app, can I access the computer version for the trial? Give us a call, Redhead, in product support, and they'll talk you through your options. Barbara, you do not have to sign up for the course. All you have to go is watch the videos and then come join us. All right. J-Vice says, going to sign up, missed the beginning of the webinar. That's okay. We recorded it, or I am recording it. We'll process that video and get you the replay, which is active only through the end of the weekend, folks. So you want to keep that in mind. I'm not sure what we're doing about the Labor Day holiday. Typically, it would turn off on Sunday night. So just to be safe, I might suggest you watch the replay before then. All right. So with that, I think we've wrapped up the questions. I appreciate your kind attention and some good questions there as well. So have a great weekend. Again, best of luck to everyone who's in the path of these storms. Hopefully see you on the other side, and you can tell us all about it on Thursday. All right. So until then, take care. Have a great weekend, and we will see you next time. Bye-bye.